Hello everyone, in this particular video we are going to discuss about the review of monetary policy framework. This is a discussion paper published on the RBI website, right? This is related to August 2025 month. So let's get the discussion started. We'll be having quick discussion regarding this particular discussion paper. Okay, so let me just before starting the discussion, let me just give you a quick background of all the things. So RBI has formally adopted the FIT framework. What do you mean by FIT framework? Flexible inflation targeting. Now every central bank, every country is having a central bank. In India we are having Reserve Bank of India. These banks set a target of inflation, right? So we are having a FIT framework which is called as flexible inflation targeting. What should be our inflation target? It should be flexible enough, right? So instead of giving a fixed percentage, we always give a range around a fixed percentage. And in India, we are having a flexible inflation targeting framework of 4% plus minus 2%, right? So it can go up to 6%. It can go down to even 2%. So we are flexible enough to keep inflation rate in control within this particular range, which is called as FIT framework, flexible inflation targeting. Now in the preamble of RBI, it is clearly written that emphasizing on the price stability with a focus on growth, right? So we need to always keep price stability in mind. That means we need to always keep inflation in control. At the same time, we need to focus on the growth as well, because sometimes and most of the times inflation and growth go hand in hand, right? With inflation comes growth, with growth comes inflation. So this is the current target as of now. And this particular discussion paper is up on the RBI website for the public consultation. So you guys can also participate in this. There are some questions, very witty questions, I will say, that they have opened for the discussion purpose. Now, if we see the preamble of RBI, the Reserve Bank of India is required to maintain the price stability while keeping the objective of growth in mind as well. And the act has mandated the RBI to maintain a consumer price index inflation target of 4% plus minus 2%, because we cannot be so rigid. We need to be flexible enough. And later on in this particular video, I'll be telling you why India needs to be flexible, why inflation rate needs to be flexible. There is a very logical reason for that. So please be with me till the end of the video. Definitely we'll be having a lot more meaningful discussion in this particular video. So central government has notified the inflation target tolerance band on 5th of August 2016 as of now. In this particular FIT framework, we review it every 5th year, right? In every 5 years, we are reviewing it. So the last period was 2016 to 2021 and the next lot was up to March 2026. So we are already in the August month of March 2025. That's why RBI is inviting general public and any other person, any other entity to give comments regarding this particular framework if there is any requirement of any change, right? Because we are yet to conclude this particular term of 5 years of the FIT framework at March 2026. So we need to decide on whether we need certain changes in the new FIT framework or we need to go with the status quo as well, right? So these are the key questions for public feedback. You guys can also participate in this. Should RBI target headline inflation or core inflation? What do you think, guys? Let me know in the comment section. Should you think that RBI should have a target related to headline inflation or they should target the core inflation? Is 4% the right inflation target? As of now, we are having the band of 4% that is dependent on the base range of 4%, 6 to 2%. So is 4% a perfect inflation target as of now for fast growing economy like India? Second question, right? Third one, should the tolerance band, which is 2% plus minus 2%, is it fine or do we need to change the tolerance band? Should RBI move to a point target 4% to a flexible range? So RBI should move to a flexible change rather than just having a point target of 4%. So these are the basic questions that they have opened up for the discussion purpose, right? So let's start with the introduction. let's start with the introduction. So inflation targeting turns 35 this year. Many countries in the world have adopted the inflation targeting approach. New Zealand was the first country. Okay, New Zealand was the first country to implement this particular inflation targeting approach in 1990. Okay, so you should be having a basic understanding of it. No doubt, I don't think that this will come in the examination directly, but it can be useful in the interview if somebody asks you about the inflation targeting. If you start your answer, or even in the descriptive section, you can start your answer that inflation targeting turns 35 now, and New Zealand was the first country to implement the inflation targeting in 1990. Okay, so the concept of inflation targeting is not at all new. Countries have adopted it. You can have a look. The first country was New Zealand who adopted it in 1990. So काफी पुराना concept है. Now when inflation targeting fails, when I can say that my fit framework, flexible inflation targeting, is a failure, when I can say it when the failure is in 3 consecutive quarters, right? If the failure is in 3 consecutive quarters, then I can say that my fit framework is not working properly. I need to adjust my fit framework, or I need to control the inflation, right? That's what we call it as a failure, when there is a 3 consecutive quarters in which my fit framework is not working. Next, if we talk about the report, then report reviewed various aspects of the fit regime in India as of now during the first 5 years. The first 5 years were 2016 to 2021. So we launched fit framework in 2016. So for 5 years we have followed this. This was the first term, then there was the next term, right? Again 5 years, this was the second term, and now we will be having the next term. So this particular second term is going to end on 31st March 2026. Now we need to redecide, we need to realign our inflation targets if required. So that's the basic which is there in the chapter 1 of the report. If we talk about the chapter 2, it is related to inflation targeting regime in India, a brief overview. That's the chapter 2, right? So outcomes of fit. What were the outcomes of fit if I talk about the first and the second phase, right? So it's been 10 years. It's been 10 years we are following this particular fit framework, though we are still in the 10th year. Okay, it's yet to conclude. So if I talk about what were the outcomes, so inflation has actually reduced from the pre-fit average, which used to be 6.8%, and now you can see that it is 4.9%. That's the post-fit. That's the post-fit, right? So if I talk about the first phase of fit framework, then inflation was close to 4%. Now the second phase was a roller coaster ride. Why? Because it was the COVID pandemic time and the time of war, right? So it peaked to 7.8%. So can I say that there is a range of plus minus 2%? In this 4%, there is a range of plus minus 2%. So the maximum range is 6%. Can I say that in April 2022, inflation breached the fit target, right? Fit framework upper level, I can say, right? Now again, once the economy got stable, then gradual return to the target zone via policy tightening and the global stability in the prices. So that's why now inflation is very well within the control. I can say it's very well within the range. So these are the 9 years of the fit framework. The 10th one, we are still on the 10th one, right? It will get concluded in March 2026. This is the 9 year of fit framework. You can see this particular band, 4% plus 2% and 4% minus 2%, which is 2%, right? So majorly we have introduced this fit framework in 2016, and from 2000 to 2016 we can see that it's very well within the target range most of the times, right? Most of the times. There is a slight breach in 2021, and there is a more than slight breach. I can see a moderate amount of breach in 6.7% in 2023 that we just discussed. Now it's very well within the control. If I talk about inflation, there are a lot of types of inflation that we have covered multiple times, like headline inflation, core inflation, food inflation, and fuel inflation. Would like to tell you the difference first of all. What inflation? The inflation that you read in the newspapers, you hear it from somebody, right, from a friend, from a mentor, that's called as headline inflation. As the name says it all, it's headline. It's the news headline always. Whatever CPI inflation you see is headline inflation. But there is a problem in the headline inflation. It is inclusive of everything. It is inclusive of everything. If I talk about food, it is inclusive of food. If I talk about fuel, it is also inclusive of fuel. Now the problem with food and fuel is they are highly volatile. They are highly volatile. So if I reduce food and fuel from the headline inflation, what I'll be getting is core inflation. I'll be getting core inflation, right? If I reduce food and fuel from the headline inflation, I'll be getting core inflation. So that's the basic difference between core and headline inflation. Sir, but why do you need core inflation? Obviously, if food prices are volatile, you need to deal with it. If the fuel prices are volatile, you need to deal with it. But because of the high volatility in the food and the fuel, in the food prices and in the fuel prices, because of the high volatility, the entire rate of inflation is biased. Why it is biased? Because food and fuel is having an immense weightage in the total inflation. They are having an immense weightage of more than 50% in the CPI. Even a slightest, right, even a slight increase in the food and fuel prices can definitely impact the overall inflation. That's why we need unbiased data. We also need unbiased data, which is called as core inflation, right? So what is the driving reason except food and fuel? That is nothing but core inflation. And here you can see it's denoted by the orange line, and we can see a very smooth core inflation. We can see a very smooth core inflation, right? Sir, what do you mean by smooth? What I mean by smooth is, have a look at the food and fuel inflation and the headline inflation. It's like this, right? Or it can be like this, or it can be on a moderate like this. Can I say that because of food and fuel, there's a high amount of volatility? There's a high degree of volatility in the food and fuel, which is not at all there in the core, right? So because of the high volatility of the food and fuel, there is a volatility in the headline inflation, which is denoted by the black line. Look at the volatility. However, if you have a look at the core inflation, there is no significant volatility in it. It's going smooth like this, not like this, right? So that's why we always need a measure core inflation. If I talk about the accountability mechanism, then any kind of breach for the 3 consecutive quarters will be considered as a failure of the FIT framework, and RBI needs to submit a separate report if there is a consecutive 3-quarter breach, right? Now it has triggered once in November 2022. It has triggered once then that the inflation went above the, have gone above the FIT framework, right? Okay guys, so I have already told you about the headline inflation. It is inclusive of food and fuel, and core inflation is excluding the food and fuel prices. In most of the countries, inflation targeting is done on the basis of headline inflation and never on the basis of food inflation. Only Uganda is targeting the core inflation as of now. Thailand earlier used to target the core inflation, but they transitioned to the headline inflation. In India also we are using headline inflation for the targeting purpose. Now what do you think, guys? Do we have to follow core inflation or should we follow the headline inflation? Let me know in the comment section. Let me just quickly tell you the arguments related to the headline inflation in favor of the headline inflation, and some of the arguments related to in the favor of core inflation as per this particular report. So the arguments that are in favor of the headline inflation, because the headline inflation is inclusive of food and fuel. Food and fuel are having a weight of more than 50%. Just the food is having the weightage of more than 45% in the CPI. So if you ignore these two things, which are a crucial part of the headline inflation, what if I start taking core inflation and I start ignoring the food prices and fuel prices? Dude, this is constituting almost 50% of your inflation rate. How can you ignore it? That's the argument number 1 in favor of keeping headline inflation in the FIT framework. Better anchor for expectation. poor are highly affected by the food inflation. That's one more intelligent, or I can say prudent reasoning, that the poor are usually impacted by the food prices. How can you ignore food prices in the inflation rate, in the inflation targeting rate? Some arguments in favor of core inflation is it is more stable and policy sensitive. Why? Because food shocks are beyond the RBI's control. RBI can just control the interest rates, not the prices of the food and fuel. So why not to take core inflation, right? And let me know in the comment section, guys, what do you think should be the target benchmark, whether it should be headline CPI or it should be the core CPI. Let me know in the comment section. Would love to have your perspective as well. RBI stand. Headline should remain the anchor. Why? Because of inclusivity. Headline inflation is more and more inclusive. Plus, if we talk about the impact of food and fuel inflation, it is having a weight of more than 50%. So definitely the risk of food inflation spillover can also happen on the core inflation. Let's suppose there is an increase in the prices of food, right? So obviously core inflation will also be will be impacted. Why it will be impacted? Because people will start demanding for higher wages because the food is quite expensive, right? So ultimately there is an indirect impact. I can say there are spillovers because of the increase in the food prices. It can cause a spillover to the core inflation as well, right? So that's why RBI has taken a stand that let's continue the headline CPI only. Still it is open for discussion, right? So let me know your thoughts in the comment section regarding this. Headline inflation is favored worldwide as a more representative measures of the overall price condition. Guys, I have pasted the screenshots as well, right, in this particular PDF, so that you can get the feel of reading the report. At the same time, I have summarized each and everything for you as well. So let me know in the comment section कैसा लगा आपको ये एफर्ट, और एज अ होल आपको अभी तक जो भी मैंने पढ़ाया है, whether you are liking it, whether you are feeling it, whether it's useful for your examination. Do let me know your feedback in the comment section. Okay. With high share of the food and consumption basket, food inflation pressures cannot be ignored in India, right? So we cannot ignore the presence of food inflation and fuel inflation in India. If we ignore it, we are ignoring 50% of the inflation in CPI, right? So guys, these are the reasons that we just discussed. Later on, you can definitely check out the highlighted section as well of this particular report, right? Food versus core dynamic. Core is stable, but food is volatile and persistent. Trend analysis shows convergence over time. We'll be definitely understanding what convergence is all about. There is an annexure in which we will be definitely discussing about the convergence concept as well. Cross-country data. India's food inflation is less volatile than the peers, right? Food consumption share in the India is the highest among the inflation targeting countries. Again, India is having the highest, one of the highest share in as compared to the other countries if we just talk about the food inflation. Here is the mean and the volatility in inflation. If we see the pre-FIT level, that's the headline inflation 7.4. The first 5 years of the FIT level 4.4, and the subsequent period 5.4. That's the data real. So we can see a consistent decline, right, just after implementing the FIT framework if I talk about the very first period. And this is the standard deviation. What do you mean by the standard deviation? How inflation is fluctuating as compared to the target we have already fixed, right? So this is also called as a tracking error, or I can say standard deviation means, let's suppose there is a standard, how the actual data is actually deviating from the standard. That's what standard deviation is all about, right? The actual data, how much it is deviating from the standard, that's what standard deviation is all about. Now here we can see food inflation and core inflation of other countries. So if we can see here, this is the volatility of inflation. Here is the position of India, and if I talk about average inflation की कौन सी country में कितना inflation रहता है, so here we can see कि India is somewhere in the middle if we talk about the average inflation. In the fourth chapter, target format is being mentioned. So optimal of inflation target, what should be the optimality of the inflation target? So as per the global practice, here we can see the global average of other economy, advanced economies, and if I talk about the emerging economies, all are somewhere or the other, they are in 3 to 6% range, right? So there is a comment in this particular report that whether India's justification for 4%, whether the 4% target that we are following is justified or not, or do we need to change that target, right? So for that also suggestion is being considered. Suggestions will be definitely considered. You also can suggest if you are having some thoughts, then definitely you also can tell. It's open to all, obviously. So the current band is plus minus 2%. So again, the part B of this particular chapter states the appropriateness of tolerance band, whether this band is fine or we need to adjust it. Should it be plus minus 1%, 1.5%, 2%, or more than 2%? Right? So the global trend is most of the countries have a narrow band as compared to India. They are having a band of plus minus 1%. However, in India, the band is quite wider as compared to the peer, right? As compared to the peer countries. Why it matters to have a narrow band or to have a wider band? Have a look. 4% is our base, plus minus 2% is our tolerable range. So can I say that the upside that we are having, it is tolerable up to 6% plus 2%, and the downside that we are having, it is tolerable up to 2%, right? So 6 to 2% is our range, 2% is the downside, 6% is the upside, right? That should be the range. Now why do we need a wider band? Why do we need a wider band? Why? Because in India, food and fuel prices, the inflation coming from food and fuel prices are almost more than 50%. Even just the food is more than 45%, right? Is up to or more than 45%. So that's huge. And these two things are highly volatile, That's why we need a wider band. This is my opinion. Okay. This is my opinion. This is not as of now concluded. We need a wider band because in wider band, we can be flexible enough. We can manage the volatility, right? We can have flexibility. We can manage the volatility. However, most of the countries are having a narrow band as compared to India. It is more credible definitely. If we have a low range, definitely it's more credible. इससे पता चलता है कि हम बहुत ज़्यादा unsure नहीं है, right? What if I say कि okay, it can be plus minus 2%? That means I'm a little bit unsure about inflation. What if I start saying it will be close to 1% plus minus? That means I'm more sure, right? I'm more accurate here. The accuracy is quite better here in case of 1%. So definitely narrow band states more credibility, however lesser flexibility, and my personal opinion is we need space for flexibility because we are still a developing nation and we are highly impacted by the food price and the fuel price, right? So policy suggestions, some of the suggestions were to reduce this band to plus minus 1.5%. This is just the suggestion. This is not at all the implementation, right? So here you can look at the suggestion as well. Other countries are also following 1 to 1.5% range, right? So RBI likely preference, RBI will definitely continue to point targets plus band for clarity and credibility. That's why they have released this particular report. And if we sum up everything, last chapter is chapter number 5, summing it up. The experience of FIT framework introduced in the 2016 was first reviewed in 2021 has broadly performed well. RBI is clearly stating that FIT framework is broadly performing well. Everything is fine, right? However, some incidences of repetitive shocks related to food and fuel prices, obviously, I personally think that they are not at all. We cannot eliminate it easily, right? Food prices and fuel prices, we cannot eliminate them immediately. They are quintessential, I can say, right? Or I can say that they are unavoidable, right? So the Indian experience is unique as the share of food and the energy is more than half of the consumption basket in India. So India एक अलग type का country है as compared to the peers. Why? Because we are having more than 50% share दो ही items का यहाँ पे, right? So at last I have summarized each and everything for you guys that we have studied in this particular report. Now there are some annexures as well. Let's suppose annexure 2, okay? MPC resolution mapping growth and inflation objectives. I already told you guys growth and inflation, they go hand in hand. Okay, they go hand in hand, they have a positive correlation, so the objective of price stability is to be keep in mind. We need to keep the objective of price stability in mind. At the same time, we need to focus on the growth aspect as well, right? We need to focus on the growth aspect as well. Okay, so here it is written sacrifice ratio. What do you mean by sacrifice ratio? We need the inflation targeting. We need that the inflation can remain in a particular target, but we don't need that at the cost of our growth. That's what sacrifice ratio is all about. I'm ready to definitely keep the inflation within the range, but that should not come at the cost of my growth, right? That's what is written here in this particular para. And we can see here that the green bars are depicting the growth. The orange, light orange bars are depicting the inflation rate, and this is our policy repo rate. So the policy repo rate is directly controlling the growth as well as the inflation, right? It's acting as a key enabler in the enablement of the growth and in the control of inflation is what I can say here. Annexure 4 is related to your inflation and growth projection analysis again, right? So they have mentioned a special rule, Taylor rule, right? What do you mean by a Taylor rule? It is nothing but a formula that helps the central bank decide where to set the policy interest rate, like where to set the repo rate actually. So it is based on either inflationary gap or output gap. Okay, so what is inflationary gap? The difference between the current inflation. Let's suppose the current inflation is 10% and the target inflation is 6%. So 4% is what the inflationary gap is, right? So it is based on the inflationary gap plus the output gap. What is output gap? The difference between the actual economic output and the potential output. What should be the potential output of India minus what is the actual output of India? That is a gap. So these interest rates are based on these kind of gaps, which are inflation and related to output gap. In annexure 6, they have written that headline and the core inflation convergence. Now, what do you mean by convergence? The headline inflation, because it is having the food and the fuel as well. So let's suppose my core inflation is working like this. However, my headline inflation is going like this. Still, someday when the prices of food and fuel will stabilize, it will come close to the core inflation, right? This is my core inflation and this particular line is my headline inflation. So can I say that this is convergence? This is nothing but convergence. Ultimately, these lines will converge. These lines will converge when the prices of food and fuel will stabilize, right? This volatility is because of the price in the food and the fuel. Someday it will converge and come close to the core inflation is what written in the annexure 6 of this particular report. Then what is trend inflation? There is a concept of trend inflation in this particular annexure. Trend inflation is nothing but it is smooth. It is a long-term average inflation rate. Okay, it is a long-term average inflation rate. It helps the policymaker to avoid reacting to the short-term volatility, I can say, and that's what it is written here in the annexure 9. Trend inflation is defined as the level of inflation to which the inflation will converge after short-term fluctuation. So because of the short-term fluctuation, there was some problem with the convergence. However, once the short-term inflations are sorted, once the short-term fluctuations are sorted, it will converge. It will converge to the core inflation, right? So thank you so much for watching this video. If you haven't still downloaded the RBI free preparation kit, please download this. Very, very helpful for your RBI Grade B examination 2025. Link is there in the comment section. Thank you so much. And in case if you are having any query, you can join this Telegram channel and you can connect with me over Telegram as well for your queries. Thank you so much, guys. Bye bye. Take care.